Hello everyone and welcome to this week's housing market update. I'm Brian Jahanbin with Maxim Lending and I have over 20 years of experience helping homeowners and buyers with their mortgage financing. Today we're going to look at foreclosure activity over the past 24 months, discuss what's causing the increase, and talk about whether foreclosures are likely to continue rising over the next 12 months. Let's take a look at the chart. As you can see, foreclosure activity has gradually increased over the past 2 years. While the numbers are higher than they were during the pandemic, they are still well below the levels we saw during the 2008 housing crisis. So why are foreclosures increasing? There are several reasons. First, many homeowners who received payment assistance during the pandemic have now reached the end of those programs. Second, higher interest rates have made refinancing more difficult for borrowers who need to lower their monthly payments. Third, many homeowners are dealing with higher property taxes, rising homeowners' insurance premiums, and increased living expenses due to inflation. Even with these challenges, today's housing market is much stronger than it was in 2008. Most homeowners have fixed-rate mortgages with historically low interest rates. They also have significant home equity because home values have increased substantially over the past several years. Nationally, foreclosure activity has increased approximately 15 to 25% compared with 2 years ago. While that sounds like a large increase, it's important to remember that foreclosure levels during the pandemic were the lowest ever recorded. The market is gradually returning to more normal historical levels. So what do I expect over the next 12 months? I believe foreclosure activity will continue to increase gradually, but I do not expect another housing crash like we experienced in 2008. For a major foreclosure crisis to happen, we would likely need significant job losses, a severe recession, or a large decline in home values. At this time, most homeowners still have enough equity to sell their homes before foreclosure becomes necessary. If you're a homeowner and you're having trouble making your mortgage payment, don't wait until it's too late. Contact your mortgage servicer as soon as possible and ask about loan modifications, repayment plans, forbearance options, or refinancing if you qualify. The sooner you take action, the more options you'll have. If you have high-interest credit card debt, personal loans, or other expensive monthly payments, refinancing your home could still make financial sense. Even if your new mortgage rate is higher than your current one, reducing high-interest debt can improve your monthly cash flow and strengthen your financial situation. For home buyers, I don't expect to see large numbers of foreclosure properties hitting the market like we saw in 2008. There may be more opportunities than we've had in recent years, but inventory is still expected to remain relatively limited in many areas. I'll continue to monitor foreclosure trends, mortgage rates, inflation, and housing market data every week so you can stay informed and make better financial decisions. If you found this update helpful, please like this video, subscribe to the channel, and turn on notifications so never miss our weekly market updates. If you'd like to discuss buying a home, refinancing, or reviewing your mortgage options, contact my team at Maxim Lending. We'd be happy to help. Thank you for watching, and I'll see you next week with another housing market update.